Bobby, I hope you are having a great day, great night, wherever you're watching or listening in from. And if you are really attached to the charts, if you were heavily leveraged on the long side of things, you might be not having the best day, might be not having the best time of all. But we're here, we're hanging out, and we're talking about what's been going on in the crypto world in the past day or two, and summing up a little bit of what's happened with Bitcoin down about 5%, ETH getting whomped down 8%. Not fun for your boy. And basically every other crypto asset down pretty significantly in the past 24 hours, really this afternoon, kicking things off pretty heavily. And what is going on, Kyle, RC Phantom, Tyler? Hope you guys are having a good one. Mohammed. Yeah, really appreciate everybody taking the time to join, and being that it's crypto happy hour, and the big thing obviously this summer has been drinking flavored seltzer water that has booze in it. So we're going with White Claw. Blood in the sheets, blood in the streets. We're going raspberry White Claw because I have to be a child. Actually, just kidding. I have Montauk beer, so we're going with that. But I'm probably gonna drink both at the same time because I can't just open this up and not drink it. So I'll drink the beer. I'll drink the seltzer. We'll go from there. Maybe we'll get a little buzz going, and we'll have a good time. But before we get into all of that and letting people kind of join in here, want to turn it over real quick to today's sponsor. Today's episode is brought to you by my friends over at eToro. They recently opened up shop in the US, so as a lot of companies are leaving, they're coming in to service the US trader base. They actually have 10 million traders across the globe right now on eToro, and you can actually view the live portfolios of the top traders to see what they're trading, what they're doing, and engage directly with them, participate in their community. And you can view historical success, what percentage their returns have been, and what they've done over time, what they've traded, full transparency. It's really cool. And one of the awesome features that they have coming out in the near future is the copy trader feature that they have, where you can actually copy the trades of some of the top traders, crypto traders in the industry. So definitely recommend checking out eToro. You go to the link below or cryptobobby.com/eToro to check it out. So if anybody's curious, White Claw raspberry is definitely not the best flavor. It's mango for anybody who's White Claw curious. No laws when you're drinking claws. But no, it's raspberry's gross. I don't know. I have that, so I got to crack the Montauk beer. But yeah, just got to do it for the street cred, obviously. But hopping into today, so this was pretty funny too. We can pull up Angelo BTC, who doesn't tweet often, but when he does, sometimes things happen. And today, what do we got? He tweeted right before the market dumped. So 3 hours ago. I think this was at 2:12. And if we pop out, we'll look into we'll go nuts. We'll look at the 1 minute chart. We won't look at the 1 second chart, but we'll look into the 1 minute chart. He tweeted it was 2:12 p.m. and at 2:10 the market started to fall. Literally 2 minutes after that, you had a 6% dip in the market for Bitcoin. Even harder with Ethereum. That went down. Ethereum actually led the market a little bit. Ethereum started dropping at 2 o'clock this afternoon Eastern time, which is interesting when you look at it because ETH typically follows Bitcoin, right? Basically everything follows Bitcoin in the market. Isn't that typically the case? Well, in this case, Ethereum started dumping, and then Bitcoin followed suit about 10 minutes afterwards. So maybe a little bit different than what you typically see in the market as a whole, and somewhat curious to know like how far along all the dumping has gone with that plus token crap. If anybody had seen that, we talked about that a little bit last time, but plus token, if you haven't seen this, plus token got 10 million ETH in their 10 million ETH, which is a large percent of the actual float of ETH, but they got about $2 billion worth of ETH that they scammed from people in the plus token Ponzi scheme. And of that scam, of that $2 billion worth, about 50% of that was sent to Huobi and other exchanges as well. But most of that was sent to Huobi. 4.3 million ETH were sent to Huobi. Curious to see exactly kind of where that's been and if that's been moved, sold, what's happened there. But I'm curious as to, obviously Ethereum has not performed well against Bitcoin. It's been that way for quite some time, but ETH is definitely rapidly decelerated against the ETH BTC pair. So I'm curious as to how much of that was really due to what happened with how much of that has been due to what happened with Plus Token. And if anybody wants to just tell my mom right now, I'm in the middle. Hold on. Hey, Mom. Hey, I'm on YouTube right now. I'm on live, so can I call you back? Okay. All right. I'll talk to you in a little bit. All right. Bye. Whoops. Go for it, right? Her birthday's coming up soon, so I got to be nice to her. Still haven't gotten her a present or a card because I wait till the last minute on all that shit, but sorry, Mom. Mom, the meatloaf. I don't even know why. Like, typically everybody's like, "Yo, you're in your mom's basement, right?" So I don't even know why anybody why didn't just bother to go upstairs and get out of the basement. But yeah, it's weird that she would call me from upstairs when I'm down here. But hey, whatever. So somebody mentioned this and would love to hear your comments on love to hear your comments on this. So I talked a little bit about this yesterday, and I got mostly interested feedback on it, but some people were pretty hostile about it. So I talked a little bit about coin metrics and the realized cap, and I talked about that in yesterday's video. If you guys didn't catch that, I'm happy to hear from you. But coin metrics released their realized cap number, which I do think is really interesting, and does go to show kind of the level of where the average cost basis might be for your typical investor in the industry and how heavy of a bag they might be holding. And this is an interesting metric because with realized cap, you're not the way you calculate market cap right now is you look at the exact supply, the issued supply, and then you multiply that by the last traded price. So for a lot of these assets, something like Bitcoin, if it was a lost asset, this kind of takes it into account because it doesn't just take the exact price that the most recent price that something was traded at. If a coin hasn't moved in 5 years, the price it was at 5 years ago is the price that will be contributed into the market cap. So if the last time a Bitcoin was moved was when it was $200, that's the price that it would be included into the realized cap, not at that $10,000 mark or the $9,600 mark where we are now. But it gives you a good understanding of whether or not people are really weighted heavily, like people are very early on investors and are sitting in profit, or alternatively, maybe a lot of people bought into an asset in December 2017, 2018, whenever it might be, and they're holding heavy bags, they're holding losses, or if they sold their current positions, they'd be sitting in losses. So this was interesting because I took the realized cap and then I just divided that by the current supply to get the quote unquote average cost basis. And it's not perfect. It's by no means perfect. I don't think this is the best thing on the planet by any stretch. But what it does go to show is a little bit the level that you can see of cost basis for the average person if they're kind of most people have bought around this current price, or if most people are really heavily underwater. And this is the average cost basis for something like Bitcoin. I think is interesting because it does take into account a lot of the early on coins that Bitcoin's been around for 10 years. So there are a lot of coins early on that contribute to that lower the price of the realized cap and lower the average cost basis for people if they haven't been moved for quite some time. But you can see with Ethereum, you can see with XRP that specifically with XRP, it looks like XRP holders have the quote unquote heaviest bags in crypto because the average cost basis for those individuals, for the most part, is in that like $1.20 range. And with XRP at like 20, 25 cents right now, I mean, that's pretty heavy losses. ETH is down quite a bit. It's at 170 right now from the 258 it's at, but Litecoin down a bit. Bitcoin Cash down, or Bitcoin Cash was actually up. I haven't checked the price of Bitcoin Cash in the past 24 hours, but up until yesterday, Bitcoin Cash was actually in the positive, but it's also slightly skewed because of a lot of people not touching those assets from the fork. Okay, so Gordy Boy, this one's for you. And this is something that really goes to show how shitty and how awful the crypto media is. And so this is something that I think, at least in my mind, if you are in crypto, you're interested in crypto, you're watching this right now, you're listening to this in the podcast in the future, there are two crypto news sources in my mind that are worth a damn. You have CoinDesk and you have The Block. Those two, and that's it. Cointelegraph published an article. Well, first of all, I'll preface this. Cointelegraph's artists are my favorite people in the whole world. Whoever does these sketches on Cointelegraph deserves a raise and deserves the only money they make, because I don't know how, but where they're drawing this, random policewoman putting a flashlight into a laptop, like the flashlight is somehow going to expose the things in the laptop. I don't know who the artists are at Cointelegraph. I want to know them, and I want to have them just draw me a beautiful place, a beautiful picture that I could put behind me. Or, you know what? Actually, I got to reach out to my man Crypto Graffiti, and I want to have him take all these pictures and combine them into a big mural so that I can just have that in the background instead of that picture in New York. But that's neither here nor there. So the big thing that came out today, if we can try to pull this up, is information about Ripple and XRP. And as a lot of you folks know, I am no fan of XRP from an investment standpoint. I just am not. But this goes to show how ridiculous the crypto media is. So the title of this article on Cointelegraph is XRP community is threatening a takeover if Ripple execs keep dumping. So they go on to say anger about negative market consequences of Ripple selling XRP to its clients is prompting token holders to conceive of ever more ingenious means to fight back. Number one, I do personally think that Ripple distributing XRP, whether they say that's for seeding the ecosystem or whatever, I do obviously think that is detrimental to the price of XRP. In my personal opinion, I think that's an inflationary method, and that ends up diluting XRP holders, and the price of XRP goes down. But this is where it gets great. In a tweet published on August 26th, Twitter user Crypto Bitlord, yes, we're talking about Crypto Bitlord, not to disparage Crypto Bitlord, but Crypto Bitlord quipped to his 100,000 followers, I am thinking about forking XRP so we don't have to deal with the founders dumping. This will be a community effort. Retweet if you're in. Crypto Bitlord is trolling, and you have Cointelegraph out here writing actual pieces, actual articles, like real life articles that Crypto Bitlord is tweeting to Brad Garlinghouse and Joel Katz, and then they go on to talk about the security classification and a variety of other factors, and they have no idea that Crypto Bitlord is just fucking around and isn't being serious. And Cointelegraph is out here writing articles like this is actually going to happen and anybody's going to fork XRP, and that this is a real thing. And as you know, again, I am the furthest thing from anybody that cares about XRP in any way, shape, or form. But if you think that this is quality journalism outside of a awesome picture of an XRP logo with a fork kicking somebody on it looks like, I don't even know, like a Nordic trainer or something like that in the gym out of the window. I mean, that's creativity at its finest. That picture is phenomenal. But this is just read CoinDesk, just read The Block. Basically everything else is dog shit. So taking a look at some of these questions, as somebody said, welcome to the Twilight Zone. Yeah, of course. We are in the Twilight Zone, the only place you don't want to get in. So, I mean, speaking of the Twilight Zone, anytime, let me pull this up. So anytime the Twilight Zone comes up, this is all I think about anytime, because I've gone to Disney a bunch. If you've ever been to Disney, they have the Tower of Terror, the ride where you get in the elevator and it goes up and it goes down and it goes crazy, and they play the Twilight Zone intro. Literally every single time I think about the Twilight Zone now and the Tower of Terror, I think of this I think of this elevator that was in New York City at Consensus 2019 with Justin Sun flipping a coin that had a Tron logo on it saying, "We are creating boundary-free decentralized internet to return privacy and ownership to the people." That's all I think about when somebody says Twilight Zone. So two things. Reynaldo, what's up, brother? Thank you very much for that super chat. And R Crone, thanks a lot too as well, man. Appreciate that. Yeah, Reynaldo says, what's good? Another dip, another purchase. Yeah, I went in and DCA'd a little bit in. I mean, I know it's really not the usual dollar cost average, but when I see something, I see ETH drop 8%, I see Bitcoin drop 5%, I'm just going to go in and double down on my weekly dollar cost average and see if I can, if it bounces, great. I bought in a little bit lower. If not, continue to dollar cost average in. And as always, that's my continual strategy in crypto, is just DCAing into Bitcoin and a little bit into Ethereum. Although my Ethereum plan has, while I'm a fan of Ethereum, and shocker, I like both Bitcoin and Ethereum. I know that's against the rules, especially on Twitter these days. You have to murder somebody if you like Ethereum and they like Bitcoin. You have to kill them. And if somebody likes Bitcoin and you like Ethereum, then they got to kill you. It's this whole crazy thing. But yeah, I like both. Shocker, it's crazy. But ETH has not been the best thing to hang on to. So my man Stefan said, CK's gaming channel says maybe lawsuits are causing forks. And then XRP Florida says ETH is dead. Well, that's funny coming from XRP Florida. But yeah, so ETH is dead X2. That's mean. I have bags. Please don't disparage my bags. I can only make fun of your bags. That's why I have the microphone. You're in the comments. That's why I can make fun of your bags and you can't make fun of mine. So hey, that's how this world works. I run the show. But yeah, speaking of bags, I didn't get a chance after I published yesterday's video. I missed out on this. And this is really just a terrible, awful, no good, sad case of why do bad things happen to good people. And golly jeepers, shucks, darn it, bad things happen to Craig Wright recently. I mean, why do bad things happen to great, honest, hardworking people that are really just out there for the average Joe, and trying to benefit the world with all of their good, honest, hard work? And this is a good article. I will post it in the comments here for you as well. But this is a solid article worth taking a look at from The Block. And Stephen Paley, who is a lawyer with like 20 plus years of experience, who actually has a law degree and has practiced law, so he probably knows more than your average high school educated or maybe not high school educated BSVer who's saying that this is a positive for BSV somehow, or this is a positive for Craig Wright. I'm going to go with a guy who has 20 plus years of experience and a law degree and actually practices, what he does for a living. Crazy, right? But so Stephen Paley goes through the order against Craig Wright, talks about fraud, obstruction, and perjury, and the sanctions against basically the case-ending sanctions against Craig Wright in the Kleiman versus Wright lawsuit. Basically, this whole thing is not bueno for Craig Wright, and anybody saying it is good for Craig Wright is just entering the ultimate spin zone. But hey, I mean, if you can put weather on the chain, then BSV is the go-to, right? I mean, that's forget store of value. If it's raining, I want to know that shit on chain, baby. I want to know that shit now. Craig, CK's gaming channel says Craig owns like over 1 million Bitcoin. How many billion is that? He doesn't. Hot tip, he doesn't. So somebody says going to accumulate Bitcoin before backed boom. Yeah, I mean, I don't. I think backed at this point in time. Granted, I'm really bullish on just the overall infrastructure that's being developed in the industry. There are some really incredible things that are being built in Bitcoin for investment vehicles for a variety of things. There's a lot of great things that are happening in the space. Actually, one of my clients for Proof of Talent, really awesome company. They build trading software. Had a chance to sit down with them on Monday in New York and got a demo of their software, and I'm going to end up getting a chance to actually use that too. Mostly just for institutional clients now, but like the level of sophistication in software as well as the investment products and vehicles with things like backed that are being developed and being released, hugely positive for the space. I think you're continually seeing more sophisticated products, services, onboarding methodologies, kind of fits into regulation, a variety of things. However, do I think that is going to immediately impact the price of Bitcoin? No, I don't. I can't say that with any confidence, and personally, I don't know if you should expect that with any confidence either. Yeah, it sounds great. Okay, yeah, Backed is going to launch, and all of a sudden, boom, the price of Bitcoin's going to go up, and we're all going to be rich. Sounds great, right? Sounds great in theory. I don't know if that's actually going to happen. I'm doubtful that's actually going to happen. So if you have those expectations, I would caution you to have tempered expectations. But ultimately, I do think that it is a long-term positive for the industry, and things are moving in a really, really positive direction. Had a conversation today, with my company Proof of Talent, and I was talking to somebody who works at a big Fortune 500 company, talking about a couple different roles, interviewing for a position, and one of the things he said was like, hey, just give me your honest thoughts, like, on the industry. Like, is it worth leaving my job here? Is it worth leaving a Fortune 500 company to work in crypto? Is this industry going to be around in a few years? I really like it. I've been around. I've been watching everything, but like, what's going to happen? And I wasn't saying that, hey, this industry is going to be the best thing in the world and it's going to be around forever. But I said this. I was like, look, I think we are in a much better place than we were 2 years ago. We are in a much better place than we were a year ago. There are real people that are building real things that have been, kind of heads down and working on it. There are a lot of companies that have raised real money and not just valuations from tokens, and have been contributing things. There are a lot of companies that have found product market fit and revenue outside of just crypto exchanges. Things like BlockFi, things like lending companies, a variety of companies out there that have started to actually bring in revenue outside of just exchanges. So there's been some really cool things that have happened and developed, which has been positive, and I think we are really moving in the right direction. Does that mean that every altcoin is going to pump again? No, I don't think so. I don't think it means that. But does it mean that I think the industry is going to be around for the next 5, 10, plus 15 years? Yeah, I do. I think the industry is in a better place now than it was a while ago. So I'm excited about it. Proper Goal, what's up, brother? Thank you very much for that super chat. 30 euros. That's awesome. For some real wine from France. I will go and I will buy real wine from France. I should take a note of that, and then I'll just bring that on the next YouTube live. I also have this near the desk, but I'm not drinking it because I didn't really. Went to a happy hour last night and had a few beers, and I was actually, because I'm getting old now, it's like slightly hungover from like 4 beers, which is not fun. But live and learn and keep Keep trucking. I think I might have missed your comment there, Stefan. So CK's gaming channel says if someone dies with lots of BTC and has no will for his holdings, does the value of Bitcoin count in the overall market? Well, yeah, it does, and that's the interesting part to me about realized cap. And if you're interested in that, so it's coin metrics. What we got? So the interesting part about coin metrics is realized cap is that it does go to look at how it does take all of that into account, or not necessarily all of that into account, but it takes the last price that was at. So let's say if somebody, I don't know, somebody died with Bitcoin in 2012 and Bitcoin was at $50 and they had hundreds or thousands of Bitcoin and they, passed away with that money. They passed away with that money when Bitcoin was at $50. That was the last time it was moved. Well, it's obviously pretty much impossible unless that person literally raised their hand and identified themselves as like, hey, I'm about to die and I don't have, this is my Bitcoin. And even then, it's not like Coin Market Cap or somebody else out there is going to like, manually pull that out of circulation. So this is realized cap is interesting because it would take into account the fact that, hey, the last time this actually moved, that this group of Bitcoin was at $50. So this Bitcoin in this person's account was at $50, the last transaction that occurred. So if that person had 1,000 Bitcoin that was at $50, that Bitcoin is worth $50,000 instead of the 5 million or whatever, whatever it is at this point in time. Organic Fud says, when Bobby versus Sam Ripple debate, I heard you wanted no smoke. I don't know who Sam Ripple is, but I mean, anybody who has Ripple in their name, but it's weird because I thought XRP and Ripple weren't the same thing. So unless Sam works at Ripple, in which case I would respect his, I would much more respect Sam if he was actually a Ripple employee more than an XRP bag holder that had Ripple in his name. I don't know who Sam Ripple is. I have no idea. And as far as wanting smoke, I don't smoke anything, but sure, whatever. I do appreciate the $5 though. Sure, Sam Ripple is a wonderful guy or girl if it's Samantha. Who's I am Sam? So Ben Zemla says this, and I disagree with this. I think this is I would not agree with this assertion. So Ben Zemla says the FCA recognizes XRP as a utility token, the SEC to declare next. So I don't agree with that. At least that's going to happen. It could happen. I'm not saying it's not going to happen. I'm definitely not going to say that it is not possible for the SEC to call XRP a utility token. ETH has been given Ethereum ETH has been given signs that it is a kind of a quote unquote utility token or sufficiently decentralized. Nothing has come out of the SEC as far as Ripple or XRP is concerned. And just because a foreign government says something doesn't necessarily mean that the same thing is going to happen in the United States. So I wouldn't equate one to the other. Not saying it will, not saying it won't. If you want to look at it skeptically, obviously there's a lot of elements to XRP to me that don't pass the Howey test. But hey, there's a lot of other crypto assets that I think also don't pass the Howey test as well. For example, if you wanted to see something that was funny, we could pull this bad boy up. you want to see something that does not pass the Howey test, aka is a security, we can take a look at Substratum real quick. So let's see. This was, let me just make sure that this is playing. Let me make sure I got this for you guys. Oh, boom. All right, here you go. Here it is.
Our token as we release products. I'm here dropping you a
All right, here. Sorry about that.
Hello, Substratum family. Here at Substratum, we have a long-term plan to raise the value of our token as we release products. I'm here dropping you a quick but important update video that explains part of that strategy. The piece we are discussing today is how we are dealing with excess tokens and how it will help ensure for each and every one of you that the substrate you purchase will quickly but steadily gain value and maintain that value. Number one. What are considered excess tokens? We are considering any tokens that were not previously allocated.
I'm not going to go through the entire 2 minutes, but somebody from Masari shared that video today, and I thought it was I thought it was hilarious. Sorry if there's an echo. Apologies. Okay, I lied.
Here at Substratum, we have a long-term plan to raise the value of our token as we release products.
So that's the only thing you need to know as far as things that you should never, ever, 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 ever say with a lawyer is that right there. And this was from our friends over our friends over at Substratum in September of 2017. So yes, very early on, but at the same point in time, anybody with a lawyer worth anything in the world, seeing that and seeing it still on YouTube, you can go to YouTube and go to the Substratum YouTube channel and look at that and see that, yes, our main goal right now is to increase the value of your tokens by burning those tokens and by essentially manipulating the market to increase the value of said tokens. Hey guys, we're based in the US, and by the way, we're not a security. Again, I'm not a lawyer. There are lawyers out there, but it doesn't take a genius to realize that might end you up in jail at some point in time, and is also probably a big reason they're no longer on Binance or a variety of other places as well. So yeah, that's a good way to get yourself in trouble. And if you ever see that from a token, run 7,000 bajillion miles in the other direction. And sorry about the sound issues before, guys. I'm stupid and didn't kind of use the two sources correctly. So sometimes things happen. And this is also, so I talked about Matthew Mander. What's going on, brother? In quotes, this fucking fool still making videos. I hope you're having a wonderful evening. It sounds like you're in a great place in your life. And cheers to you, Matthew. It's a good thing you use your full name when you're talking. I won't have to Google you afterwards and send you a very mean letter in the mail. I won't do that. I won't send that to you, Matthew Mandler. It won't be hard to find you. So this is something too that I talked about the other day before Matthew very rudely interrupted me with commentary on me making videos, which fuck yeah, Matthew, I am still making videos, bitch. Sorry for anybody with kids that is watching. That's like maybe one of you. Apologies. Okay. You, Matthew. But Litecoin. So, hey, Matthew, why are you still... So, yes. My man, Charlie Lee, Litecoin, and the concept of open source development and funding. I do think that this is something that is really interesting and hasn't been talked about a ton. I mean, it's been talked about a little bit by people, but I think I got some heat from Litecoiners on this, or people that really like Litecoin. I'm not going to say Litecoin is bad, not at all. If you want to think that, great. If you think it's the best thing ever, great. But what I do think is interesting is the idea of funding open source development, because a lot of people, when I talked about this, said, you know what, Litecoin works, so why do they even need to develop on it anymore? Well, I don't think you just want to leave something sitting there. Granted, Dogecoin works and nobody actually uses it, or nobody actually develops on it. But with Litecoin, it's really interesting because the Litecoin Foundation is primarily the contributors to advancing Litecoin as a whole, and the vast majority of donations that have come through with Litecoin's foundation has been through Charlie Lee. So Charlie Lee has basically been single-handedly supporting Litecoin and supporting Litecoin's development. And when you think about that, there's kind of two ends to the spectrum of crypto. You have two different things. You have fair launch cryptocurrencies, which are mostly proof of work cryptocurrencies that have no pre-mine. Something like Bitcoin, something like Litecoin, something like Grin, cryptocurrencies like that, where on day one everybody has the exact same advantage as everybody else. The only unfair aspect of a quote unquote fair launch proof of work cryptocurrency is the fact that you might not have known about it on day one. And if you had known about it, you would have participated in it somehow more than the other. So that would be the only like unfair part, or the part that people get mad about. But other than that, it's about as fair of an opportunity. The only kind of barrier to entry is actually knowing about the opportunity to mine or to acquire that asset. So when you're looking at proof of work, that's one end of the spectrum. On the other end of the spectrum, you have things like ICOs, or you have things like pre-mines, or some type of founder's reward, where you have money that is initially funded to either people who are developing the platform, or in the case of a founder's reward or something like that, you have money that is consistently paid to those individuals to develop that crypto asset. So you do have this centralized entity or money going to a group of people to develop the product, to develop the protocol. The great part about proof of no founders rewards, fair launch proof of work cryptocurrencies like Bitcoin, like Litecoin, some cases like Dogecoin, whatever it might be, is the fact that it is actually decentralized to the point where, there is no centralized entity really behind it to continually move things. There's nobody to send a cease and desist letter to, kind of a variety of things. It's a lot more decentralized than a pre-mine or an ICO or something like that, because if there is an ICO, there's a group of people that are taking money from you and developing and trying to make things better. But on the other end of the spectrum, the problem with these fair launch proof of work cryptocurrencies is the fact that there is no economic incentive for continued development for the most part. Open source development, in most cases, people are doing it out of kind of the good of their hearts, or just their own interest level. And there are very few people that are paying. There are very few organizations that are actually paying people to continually develop that open source technology. And that's what Litecoin is running into right now. For Bitcoin, it's a little bit different because you have some companies that are subsidizing development. You have a number of different like venture-backed companies, things like, let's say, whether or not you like them. Like a Blockstream is subsidizing development, a chain code is subsidizing development, Square is now subsidizing Bitcoin development, Coinbase a little bit is subsidizing development. You have a variety of companies that are either making money or they're VC backed and they're basically subsidizing Bitcoin development. And right now, like the only person that's really doing that for Litecoin is Charlie Lee. And it's really hard to kind of figure out the long-term incentives. And the same thing could be said about Bitcoin, but right now there's a lot of people and there's venture money in it and some other kind of components behind it. You also have a lot of people that made a lot of money on Bitcoin, so they're happy to throw a little bit of money in to subsidize that development because they've been made fabulously wealthy from Bitcoin. So Litecoin and other kind of smaller fair launch proof of work cryptocurrencies, I think are going to run into this interesting issue where how do you continue to have somebody develop on the platform when there isn't this big pool of money from like an ICO or from a pre-mine or from anything like that? There isn't an existing pool of money that people can just have and kind of slowly take away from. You need new development. You need new donations basically on a monthly basis to help these people out. Otherwise, they're going to either they're going to have to contribute to the software for free and do it on their spare time and not do it full time. Rupert Rutsky says, "Nice FUD." I mean, if you classify this as FUD, it's not FUD. I personally don't think this is FUD. I think that if you are too stupid to see that this is a problem with fair launch proof of work cryptocurrencies. Like I said, there are pluses and minuses to everything. If you think everything in life is sunshine, rainbows, and lollipops up your ass, that's great. But it's not. Litecoin is great and Bitcoin and other fair launch proof of work cryptocurrencies because you have these assets that nobody centrally controls. Even though Charlie Lee owns a lot of Litecoin and is a prominent member, I would still consider Litecoin to be a pretty decentralized in the mining sense and who controls it, things like that. Yes, Charlie Lee is the figurehead, but in the same sense, he's the one he's really the only person that is donating anything for the continued development of the platform. And I think that this is important for Litecoin, but it's even more important for the smaller fair launch proof of work cryptocurrencies because people need incentives to continue to develop. And when you look on the other end of the spectrum here, I love you too, Robert Rutsky. So when you look at the other end of the spectrum, and Robert's a great name, by the way. When you look at the other end of the spectrum, though, you have the ICOs, and you have this big pool of money initially. So, like, let's say there was a $15 million ICO or a $20 million ICO. You basically have this big pool of money now of these people that have money for runway, but at the same point in time, either that's going to run out at some point in time, or they might be moving on to different things or whatever it might be. So there's kind of two very interesting dynamics when you look at the industry as a whole that somewhat fascinate me. But I do think that, yes, open source development for Bitcoin, funding open source development is a problem. And I do think it is really, if you are a Litecoin fan and you can provide a good solution to how they can continue to fund the development of the platform, or Bitcoin too. Like, I'm not saying it just applies to Litecoin, but I just think Litecoin is a large asset that competes against other bigger assets, but has relatively little funding in comparison. Robert, I'm reading fast, bud. I can't see commas. There's a lot of questions. I'm gonna talk about lollipops and unicorns, and I'm gonna apologize for you for not seeing the comma. So XRP Florida says Litecoin has 0 contracts and ETH has a scaling problem. Both are simply dead. I don't know. I don't keep track too much about Litecoin. And yes, Ethereum does have some scaling issues. I do think they are actively being worked on. And it's going to be interesting to see if, when, how ETH 2.0 ever launches. I do think ETH 2.0 is one of the most ambitious projects or kind of developments in the crypto space. The one thing I would say about Ethereum is Ethereum, by far, out of everybody, by far has the largest developer community out of anybody. And that is tough but not impossible to overcome. It is not impossible for any other asset, or I don't want to say asset, for any other project platform out there to take developers away from Ethereum. But that is a huge competitive advantage right now that Ethereum has over really anybody else for the most part. Granted that Bitcoin also has a very large number of developers, but when you look at like Ethereum versus the other, I don't think Bitcoin and ETH are necessarily like apples to apples comparisons on the developer path. But when you look at Ethereum versus a lot of the other platforms out there, ETH is definitely kicking ass when it does come down to developer mindshare, developer interest, and it's something worth noting. And if you want to discount that, then great. But I do think it is worth noting. So the Sprinkler Ninja says this: there should be a marketplace where people could buy drugs through the mail using cryptos. That should help ramp up adoption. I don't know if that's a joke or not, but I think that might have been done with a little website called the Silk Road. And I think the founder of said website might have been in jail and is still in jail for the last like 5 years and is going to be in jail for the rest of his like multiple lives because of that website. So if you are interested in starting up that website, the Sprinkler Ninja, I would highly recommend against that. But definitely, definitely it could help with adoption, I suppose. I would not want to be a part of that one though. Mr. BN says my money's on ETH for the win. EOS is my backup plan if ETH 2.0 doesn't pan out. Personally, I think that I'm not a huge EOS guy at all. I think that there is really, like, when people point to centralization, there is really clearly centralization amongst block producers on EOS. And if you're comparing it to like there's a certain degree of centralization that comes in place where you have to start looking at how does this compare against something like AWS. And in that case, it is much better to run whatever you're trying to on AWS over EOS. So yes, EOS has a massive war chest, and yes, they raised $4 billion, and yes, they have these huge ecosystem funds, and I do think that there is some east west bias. I think that EOS is a lot more popular in Asia than it is in the United States and in Europe and South America. And I do think that Ethereum is more popular in the US and Europe and in South America. So I do, I'm in New York. Like I don't see, or for the most part hear, anybody doing anything with EOS for the most part. That could be very different if I went to Asia and if I went to China or to some other places, but I haven't been there lately, so I can't really speak to that. But I do think that EOS is significantly more centralized than the competitors in the space, and that centralization makes it not worth the time to consider that over something like AWS. So Rupert, apologies, my man Rupert Robert. What about Neo? Is that still going on? So I haven't followed up too much with Neo. We'll take a look at Neo against Bitcoin. I'm sure it's just in the dumps. It's actually bounced a little bit. That's surprising. Neo's actually performed not bad against. Well, that's not bad is comparative. If we zoom out, Neo has not performed super well against Bitcoin at all. And I don't hear too much personally about anybody doing much with Neo. And again, this could be different because I'm a US centric guy. I live in New York. Most of the clients that I work with are based in the US or based in Europe. So I don't have a ton of exposure to what might be happening with Neo, but I haven't heard a ton about what's been happening there. I really don't hear that many people talk about them outside of speculating on the price of the asset. So, and I don't even hear that many people speculating on the price of the asset anymore. I mean, I feel like if it keeps going this way, it might get rebranded to AntShares. I'm just kidding. That's the worst joke ever. So Mr. BN says this, I'm working on a project right now that will use the power of DeFi on ETH to offer lower interest auto loans to high risk borrowers. I'd be interested to hear how that pans out. There are some I'm a huge fan of the DeFi space. I think that it is one of the most interesting use cases. I've talked about it, I've made videos about it. There are a lot of different use cases that you can see with DeFi, but let's check out LoanScan and see what's going on with LoanScan right now. So I mean, right now in the crypto space, you can earn. Wow, DYDX is up to 23%. Holy crap! And this is all variable, so this changes quite a bit. But right now in the quote unquote DeFi space, you can earn 6% annually on your money with Compound Finance. You can earn 8% on your money with Nexo. You can earn, well, that's USDC. If you're looking at DAI, which does have, I would say, more stability fluctuation. But with DAI, you can earn 10% with Compound Finance. Right now, 23% annually with DYDX. And again, with DYDX, you're basically paying people, or people are borrowing those assets from you because they're shorting Ethereum or they're shorting something else. But with DYDX or with some of these other crypto assets, you can actually earn quite a bit. And we'll go over to the crypto too, or to other crypto assets. But with BTC earning 6% annually, with WBTC, you can earn some additional money. With ETH, you can earn 3% with BlockFi or some of these other players. So there's definitely some interesting things that are happening in the in the DeFi space that continually fascinate me, and I think there's a lot of cool things that have started to come into place. Sprinkler Ninja says high risk auto loans are the cause of the next credit collapse. I mean, I don't know too much about the world of high risk auto loans, but if that's the start of the next credit collapse, is somebody not being able to pay their BMW 3 Series, there might be bigger problems out there. Who knows? This is one thing that I do think is, where's the pull together? So this is a cool idea that I don't know if I've talked about in this channel before, but I would definitely check out. This is something that is, so you guys might look at the DeFi space and say, okay, this is stupid. This is something that's dumb, and I don't really care about it. But there are really cool applications that can be built on top of DeFi that are pretty fascinating. So what do I mean by that? Well, so with Compound Finance, which is compound finance is kind of an automated borrow lending protocol where you can borrow money or you can lend money to earn. And with compound finance, you can earn money on your DAI. So DAI is a stablecoin. DAI is a stablecoin built on Ethereum, where that relatively holds value to the dollar. That's the purpose of DAI. It's supposed to hold it to $1. Sometimes it's gone a little bit lower. Right now, it's trading over $1. But on compound finance right now, if you were to supply 1,000 DAI over the course of a year, all else being equal, you would earn $100 for just keeping that there. You would earn 100 DAI. You would earn $100 because the interest rate is about 10%. So a cool thing that's been built, and I thought this is pretty damn awesome, is this thing called Pool Together, which uses compound finance and smart contracts. So what happens and how does it work? Well, they have these lotteries, and what happens in the lotteries? Well, basically they have these pools where you put in money and you buy tickets to the lottery. So let's say, for example, like let's say there is one ticket costs one DAI. So if you want to buy 100 tickets, you put in 100 DAI, so you get 100 tickets. What happens is everybody pools their money together, and then at the end of kind of the pool, that money closes, and they leave all of the money together in the lottery pool, and they invest that into compound finance, and they earn interest on that. So let's say they pool together $100,000, and they put that into compound finance, and you're earning 10% on compound finance over the course of a year. But let's say they only open that for a month. So the prize is $1,000. And so they pick one ticket randomly. One ticket randomly wins that $1,000 of accrued interest on compound finance. So why is this cool? Where everybody gets their money back. Even if you lose, you don't lose that $100 you put in. You get that money back. But one ticket actually wins the pooled interest that everybody earned from that. So worst case scenario, you get your money back. Best case scenario, you are the winning ticket. You are Charlie in the Chocolate Factory, and you get your money back. So that's something that is relatively interesting that I think that compound finance and DeFi enables this concept of a kind of a no loss lottery. The only thing you lose is the money you spend on gas fees when you participate in the ecosystem. But that type of thing that is built, I think, is pretty damn awesome. No mic, of course. Let me check that. That is. Can you guys hear me all right now? Let me know. I don't. Okay, cool. Thank you. I apologize. But let me know your thoughts too on that. Would be interested to hear if you think that that process of like pooled lotteries, if that's interest to you, or if that's of interest to you. Do you think that's interesting? Do you think that's stupid? Would love to hear in the comments as well. I don't like you guys playing that no audio joke on me at all. That's not funny. I do that. I mess up too much for you to play that joke on me. If you guys are drinking anything good, I just finished my Montauk Summer Ale, so I am now drinking the lukewarm White Claw, and it's not good. It's not good. Andrew Rivers says, Bobby, you still playing HXRO? I have not played it recently. I've been pretty busy with Proof of Talent and working on placing people in new opportunities and new roles. So have taken up a lot of my time, or that's really been kind of the majority of the time that I've been spending recently. Is, I mean, that's my day job. I'm trying to build proof of talent and trying to scale that out. If you by any chance too are a technical recruiter, if you work in technical recruiting and or know anybody that works in technical recruiting, I'm looking to hire somebody full time, like a legit full time, employee to work alongside me for recruiting, for proof of talent. So if you happen to know anybody that works in technical recruiting and you're watching or listening to this now, I would love to hear from you. My email is rob@proofoftalent.co. Send me an email. Let me know. Would love to have a quick conversation with you, see if it would be a good fit. But yeah, definitely hiring and growing out the business. Have a ton of new clients. Have an awesome new opportunity today, and a bunch else. So that's been great. Taking up a bunch of the time. So Wolfbane says this about our friends over Proof or Pool Together. It kind of makes you wonder why people would part with their funds in a normal lottery. Yeah, I mean, it doesn't. This is to me, this is pretty cool. And again, I have no affiliation to this whatsoever. I just think this is a really cool application of the quote unquote DeFi technology, where you have the ability for people to participate in these lotteries and not lose any money, but still have the upside in the long run. So like, you might win that 3,800 DAI prize, but if you put money into it, like it's not the only thing you're losing out on is the opportunity cost of having your money locked in that smart contract for the duration of that period. So unless you were doing anything with that DAI in particular, that is the opportunity cost. That's the cost of it, is the opportunity cost plus like probably $1 in ETH for the smart contract. So it makes it really interesting. Greg Gingras says, "Is White Claw garbage?" I don't. So I'm not gonna sit here and say White Claw is the best thing ever. It's not. But White Claw is, if you are on a diet, or like watching carbs or a bunch of other things. So like White Claw is, let's see, the nutrition facts. It's 100 calories. It is 2 carbs and 2 sugar. There is nothing. It's basically alcoholic water, and it kind of tastes like alcoholic water. That's basically what it's. It's alcoholic seltzer water. That is what it is. It's 100 calories. There's 5% alcohol, so it's actually not bad from an alcohol standpoint. Like if you drink enough of these, it'll get you, it'll get you tipsy. 12 ounces, 5%. It's more alcohol than you'd get in a Coors Light or a Bud Light or something like that. So it's not the worst. Mango is the best flavor. A lot of the other flavors are gross. Mango is the go-to. Guys, at this point in time, I gotta respond to some emails and get things moving with Proof of Talent. But I really appreciate you hopping on and hanging out with me for an hour or so. If you're new to the channel by any chance, make sure to subscribe. If you've been around for a while and I made you mad by the numerous things I said, probably about cryptocurrency that you owned, make sure to hit that thumbs up button. Make sure to hit that like button. And we'll definitely hang out here in the future. Again, really do appreciate the time, everybody. Take it easy. Peace.